In this presentation, we will record factory overhead and apply factory overhead to jobs within QuickBooks Pro, QuickBooks Desktop. Here we are in our practice problem 2. We currently have the open windows open. You can open the open windows by selecting the view dropdown and the open windows list. We're going to first consider what we're going to do with the Excel sheet. So we're going to go back to Excel. We're on the 1.2 tab. And what we're considering here is the items in green. That's what we will be working with. You'll note, however, that we skipped the item in red because we're not going to do that under this system. That's what's going to be different from this system to the last problem. So in number 16 was where we applied factory overhead based on a predetermined overhead rate. What we're going to do here is say, hey, we're not going to use a predetermined overhead rate. What we're going to do is basically, or we're going to use a rate, but we're going to apply the overhead as it is incurred. And so there's some complications, as we'll discuss, as we think about the things that would be applied in overhead, because the concept of overhead is this. The concept is that we don't know how much of the overhead should be applied to jobs or which job it should be applied to. Therefore, we typically put it into the factory overhead account and then apply it out using some kind of estimate. So you can, under this method, what we're going to do is we're going to say, hey, when we incur the overhead, I'm going to apply it out to the current jobs that we have at this point in time. So we're going to apply it out basically as we go. Now, the problem with that is that we don't always know, the total overhead costs, and a lot of the costs that we apply out may not happen till the end of the time period. Things like depreciation that we want to apply to the job, we may not, do that until the end of the time period. So we could have a timing issue as to how we're going to apply out this information. So let's think about this as we go. The bottom line is, rather than going into the factory overhead asset account and then applying with an estimate a predetermined overhead rate, we're actually going to be applying out what would be considered the overhead costs basically as they are incurred in some way, shape, or form, some fashion. So let's think about these, how this would work as we go. So we got the indirect labor paid and assigned to the factory overhead. So we have indirect labor that's going to be happening. So this is going to be someone's doing work, and usually we would debit the wages expense and credit cash, the most simplistic type of journal entry related to it. We're not going to process payroll here. But under the normal system, we would then debit, instead of the expense, we would put it into work in progress. But this time we don't want to put it into work in progress and track it all the way through. We're going to put it directly to an expense, but it's going to be for the cost of the goods sold rather than basically just wages expense for the time period. So the debit then we're going to put this to cost of goods sold, and this is for indirect wages. And then we're going to put the other side to cash. Now, the reason that we call it indirect is because we don't know exactly how to apply it to the job. If you have someone like a supervisor, I don't know which job to assign. That's why I didn't want to put it to cost of goods sold directly. Sometimes you might want to put it into the factory overhead and then apply it out. But we're going to say we don't know which job it assigns to, so we'll have to estimate in some way. And you could say, well, we have 3 open jobs right now. Why don't we just figure out which job you could take the number and divide it by 3 is how you can think about that. So if the work was done recently and we know that it was worked on particular jobs that were open at that time period, we could use some kind of factor to apply out. Normally it wouldn't be just divided by 3 because the jobs would have different sizes. So we might take something like, hey, let's take a look at the relative materials that will be used and take a percentage in some way to apply out the indirect labor in some fashion. So what we're going to take here is we're going to use these percentages, the 19, the 33, and the 48. Now you could use these, again, a lot of different kind of measurement tools. You might be saying, hey, I know that the direct materials is the first thing I do, and I apply those out the first thing I do. So maybe I could use that ratio between the jobs to kind of to think about how to apply some of the stuff out. So you'd have to use some kind of method to apply out. Usually you'd have to think about how large the job is, one job compared to the other, and then use some kind of activity base to make ratios to apply it out, like materials, like labor. So we're going to use these percentages. I'm going to say then this is going to be equal to the amount of the 14 times the 19%. I'm just going to pick up that 19% there. So 14,000 times 19%. This one I'm going to say the same thing, but this I'll just type it in there, 14,000 times 33%. And this is going to be down here. It's going to be equal to the 14,000 times the 48%. And then if I was to add them up, that adds up to the 14,000. So that's what we would have to do. We'd have to figure out how we're going to tie this out, how we're going to basically break them out or use the allocation in order to break it out. And then, of course, our job cost sheet, here's the 582. And then this is what's on our jobs. So our jobs here, if you take the 582 and the beginning balances, then we tie out and we can reconcile to the trial balance. Okay, so let's do that same thing in QuickBooks. So it's going to be a fairly straightforward transaction. Then we're going to go back to QuickBooks and we're going to go into our check. I'm going to take it from the checking account. It's going to be as of the date. I believe it was the 20th. And I'm going to call it employee 2 because this is the indirect labor. So I'm going to say it's another employee. I'm going to set it up as a vendor, not an employee. The amount was 14,000. And then we're simply going to break that 14,000 out. So to do that, I'm going to go to the items tab, not the expenses tab. So within the items, we're going to call this factory overhead. And then within factory overhead, we're going to tie it out according to our percentages we figured here. So it's going to be 2660 for job 14. So we're going to say the cost is going to be 2660 for job 14. And then factory overhead again. And then we're going to break it out to 4620. So 4620 for job number 15. And cancel. What did I do? Not 150, 15. And then we'll go to factory overhead again. And then the last one is going to be for 6720. So we'll make this amount the 6720. That's job number 16. So there we have it. I'm going to say save and close. And yes, they have a different account number. Should be account number 2. I'll save that. I'm going to say save and close. Yes. And then I'm going to go to the reports up top. We're going to go to the accounting and taxes and the trial balance. And we'll check our reports. We're going to say 01/01/20 to 12/31/20. And we have the check up top and we have the cost of goods sold. Double clicking the cost of goods sold. We then have our transactions down below. Double clicking that. There's our check. Closing this back out. Closing this back out. Back up top, reports. We go to the reports drop down. We're going to go down to the job time report. Let's take a look at the job estimate versus actual. And there's our numbers there tying out to the 665 on the cost side of things. So that, if we go back to our Excel sheet, ties out here, right? That's the sum of the 665, the reconciling item being the beginning balances in the job report to get to the cost of goods sold number. So we'll check that again at the end. Let's do the next one. It's going to be the same process for many of these factory overheads once we decide on an allocation method. So I'm going to make this blue to say that we have done that now. So I'm going to make that blue. That one's been done. Now we're on this one on the 30th, which says that's going to be indirect materials. So not direct materials, but indirect materials like grout or something like that. We don't know, which job to put it on. We don't want to track it like the inventory item we did before. What we want to do is find some kind of allocation method. So in other words, I know I spent $30,000 in for this item. I know I have 3 jobs open. I can then try to think about, well, how am I allocating this $30,000 to those 3 jobs? We're going to use the same percentage method. So the transaction on the GL is straightforward. We're going to a debit to the cost of goods sold instead of the factory overhead because we're allocating directly now. I'm going to put my cursor in N15, say F2 plus F2 to move back over and pick up that 30,000. I'm just basically double clicking on it, enter, and then I could double click up here and say plus and pick up that credit. Same transaction here, and now we're just going to have to split it out, and I'm going to split it out in the similar fashion. We're going to go back over here. I'm going to say this is going to be in cell T10 equals 30,000 times, and we'll pick up that 19%. Then we're going to be over here in Z10 equals 30 30,000 times, we're going to pick up that 33%, and then we'll be down below, we're going to say this equals the 30,000 times, we'll pick up that 48%, and if we were to add these up, this plus this adds up to 30,000, because obviously the percentages add up to 100%, and that means if I was to add all these up, the 3 jobs, that to reconcile that to cost of goods sold, which is there, we need to have the difference being the beginning balances. And as long as we can reconcile and know what that is, we should be good to go. So now we're going to do the same thing in QuickBooks. I'm going to write another check. Write a check, and we're going to say tab. I'm going to take this to another vendor, and I think this was on the 30th. And let's take it to Staples. And quick add, another vendor. We're going to say this was for 30,000. We're on the tabs side, not the expenses side. We're going to then say that we had overhead, and we're just going to apply it out to overhead. And obviously you could give more detail. You could have overhead as a subcategory and make more categories, and we'll do that in the next problem. So we're going to keep this basically just with these 3 items in this problem. Okay, so then the amount is going to be for job 14, 5,007. So 57. And then the customer is going to be 14. Factory overhead again, going back to the amount, which is going to be 99. So 9,900. So 9900. That's going to be job 15. Then we've got factory overhead again, and that's going to be going to the amount of 14,400. So we're going to put in 14,400. That's job number 16. Let's go ahead and save and close that. Yes. And then we'll see what happens on the trial balance. Within the trial balance, cost of goods sold now at the 612. There's the amounts down below. If I close this back out, that 612 matches what we have over here in our trial balance. And then if we look at the jobs report, then we're at the 695 for the total cost, which makes sense because that matches what we have over here, the reconciling item being that 83,000, the beginning balances, which again, you can find in a job cost report by just going to the beginning of the period, 12/31/19 to 12/31/19, and there's that 83,000 beginning balance. So I'm going to close this back out. Let's do the next one. Same process for all of these. So I'm going to go to the next one and say, all right, let's go and make that blue. And the next one is the utilities. So the utilities is something that we might have like on the factory where we put stuff together and whatnot. And note, again, the utilities bill isn't something we get till the end of the month. So it would be difficult then for us to apply it out and think about how we would apply it out if we have the job during the month. So we might have if you use a system like this, you might need to then apply out the billing system or keep the job open, right, until the end of the month, till you know the actual utility bill, so that you can then apply out the utility bill to the jobs that were affected during that time period. So you'd have to find some type of allocation method. So just note that, again, the utility bill is going to happen at the end of the month for the time period that it was consumed in order to use for the jobs in the prior month. So given that, we're going to use our same percentages here, same idea then. We're going to double click on cost of goods sold, go to the end of it. Once again, increase in the cost of goods sold for it. Again, you could create subcategory accounts for utilities, cost of goods sold. We'll do that next time, but we're going to keep it, a little bit just these general accounts right now. And then we're going to go up top and we'll go to the cash. That'll be the other side. Now let's go ahead and record this on the jobs. That's going to be for 12,000. So 12,000 over here. Now we got this equals 12,000 times the 19%. And then over here, we've got this equals the 12,000 times the 33%. Okay, and we're just breaking these out according to the percentages. And then over here, this is going to be equal to the 12,000 times the 48%. If we add up all the jobs, they add up to 707. The difference between what's on the trial balance and the job is the beginning balance of that 83. Let's do this again in QuickBooks. So we'll go back to QuickBooks. We're going to write another check. Do this again, same process. Write a check. and then I'm going to double click on this little icon down here or no icon, nothing's there, but and that's going to be check number 4, tabbing through this, and we're going to say it's Edison, which is an electric company. So we're going to say we pay Edison, the electric company, and I'm going to say vendor, and the amount, I believe, I don't know what it was. It was 12,000. I think it was 12,000. Scroll back over here. 12,000. Yes, it was. All right. So we're going to put the 12,000 for the amount. We're in the items tab, and within the items tab, we're going to put then the amount for the factory overhead. And the factory overhead is going to be equal to, for job 14, the 2,280, job number 14. And then factory overhead for job number 15 was 3,960. So we're going to say 3,960 for number 15. Factory overhead for number 16, we're going to say is 5,760. So we're going to make this 5,760 for job number 16. And that should add up to the 12,000. If I say save and close, say yes, back to the trial balance. There's the trial balance amount of the 624,000. If I go back to our trial balance here, we're at the 624,000 there. That looks good. If we go back to our report that I closed last time, reports drop down, we're going to go to the jobs, and we want the job versus actual summary. We're concentrated on the cost items. We're now at the 707. And that matches what we have here on our worksheet, 707. The difference is those beginning balances, the 83,000. So same kind of difference. We could find that in QuickBooks by running the beginning balance report. We'll find that 83,000 to reconcile. All right, let's go to the next one. We're going to go back to the home tab here. I'm going to go back to our Excel, and I'm going to say that one is done. Right click, I'm going to make it blue. Then I'm going to unhide some cells up top. I'm going to put my cursor on E, left click, drag over to L, let go, right click on that selected area and unhide. So now we have some more data. We're going to do 2 more that'll be similar. Then I'm going to hide these by putting my cursor on left clicking B, dragging to F, let go, right click the selected area and hide. So we'll hide those. And the next one was factory rent. Again, same kind of thing. The rent's not due until the end of the month. So this is another thing that you'd have to say, well, if I'm applying it to the job, I'm going to have to wait till the end of the month before I invoice the job so that I can apply out the factory rent to it and to the proper jobs in some way, whatever system I'm using to apply out the rent to the open jobs, instead of putting into the factory overhead and then using a predetermined overhead rate. Okay, so but same method. We're going to scroll down and we're going to be debiting the cost of goods sold. I'm going to do that by saying F2 plus F2. Scroll back up and we're going to pick up that 20,000. The other side then being in N4, I'm going to go into it by saying not that. I'm going to undo that. I'm going to say F2 plus F2. And there we have that. 20,000, same application process over here. So now we will apply it to the job by saying equals 20,000 times the 19%. Over here, this is going to be equal the 20,000 times the 33%. And then down here, this is going to be equal the 20,000 times the 48%. Then if I was to add these up, the 9,600 plus the 3,800 plus the 6,600 adds up to the 20,000. Same process in QuickBooks. We're going to go back over. We're going to write a check. And we're going to say that the check is going to be for, I'm just going to call it the rental company. That's their actual name, the rental company. That's what they call themselves. 20,000. And that's not actually what they call themselves. A mock name there. Okay, so then we're going to go to the items. The items is going to be factory overhead once again. Cost for job number 14 is going to be 3,800. So we're going to say 3,800. Job number 14, factory overhead. The cost for job number 15 is going to be the 6,006. So we're going to go back over here and pick up the 6,006. So 6600, and then that's going to be job 15, and then we got factory overhead once again, and we'll pick up now the 9006 here, 9006. And so that's going to be 9600, job number 16. That should add up to 20,000. We're going to say save and close, and yes. Back to the trial balance to see what happened. We're at the 644 here in the cost of goods sold. That should match what we have on our trial balance in Excel, so that looks good. Then we're going to go to the other side in the job. In the jobs, we're concentrated on the actual costs. We're at 727,000. That matches what we have in Excel, 727,000. That looks good. The reconciling item being, again, that 83,000 to reconcile to what is on the trial balance. All right, now let's do this one more time. This one's going to be a slightly different. So we're going to say the next one is related to depreciation. Now, depreciation, again, something done at the end of the time period, but it also doesn't involve cash. So we would need to know at the end of the time period, to apply it out and keep the job open until we apply out the depreciation or figure out which jobs we need to apply out the depreciation to. And the debit, there's no cash involved. So the credit then is going to go to accumulated depreciation. So let's think about that one, a little bit different worded here. The depreciation is going to be decreasing the factory equipment. We're applying out the cost of the factory equipment. We usually think of it as a debit to depreciation expense, a credit to accumulated depreciation. And in this method, however, normally under job costs, as we did last problem, we debited the factory overhead. But this time, like we've done with all the other ones, we're going to be debiting the cost of goods sold. Again, you can call it cost of goods sold equipment or something like that, but that's going to be the format. Same concept though, that we're going to debit cost of goods sold for that 30,000. The only difference here is the credit's not going to go to cash because this is not a cash related item. It's going to go to the increase of the contra asset account accumulated depreciation, which will decrease the book value of the factory equipment. So there we have that. There's the other side. Now let's record this to the jobs. Same type of concept over here. We're going to go back to the jobs and we're going to say that this is going to be equal to the 30,000 times the 19%. This will be equal to the 30,000 times the 33%. And down here, this is going to be equal to the 30,000 times the 48%. And then if I was to add them up, add those three up, they add up to the 30,000. We're going to record this into QuickBooks. Now, we can't use a journal entry like we normally would. Normally, this would be an adjusting journal entry. We would go up to company up top and we would say we want to make a journal entry. But we don't have the same kind of system to set the jobs this way. So what we need to do, I'm going to close this back out. Even though cash isn't affected, back to the home page, we need to use some kind of item. I'm going to close out the checking account here. Back to the home page. We need to we need to use some type of form here. And we're simply going to use another check. This time, however, the check is not going to have any balance to it because we're not actually writing a check. So I'm going to open the check and I'm going to double click to open the check here. Now, this is a case where since we're going to have a zero check, we're just using the form for something else. You might not want it going to your checking account. You might want it going to some other kind of a cash type of account, or which might be, so I could say I want to set up a new account, which is going to be, let's say, a clearing account. That's what I call an account that starts at 0 and then ends at 0. So there's no actual activity in it or no balance in it. It's just going to be a holding account. So I'm going to say set up. It's going to be a bank type account. That's the key. And then we're going to say save and close. And that gives us the mechanism to be using this account, to be using the check. And that gives us the mechanism to use items and be able to use the jobs related to them. All right, so we're going to go through here. We're going to say this happens on 1/30. This probably should be the 31st. And we're not going to put any amount there. We're going to be in the item side, and we're going to say factory overhead. We're going to apply out the factory overhead just as we have in the prior items. So the factory overhead is going to be the 5,007 for job 14. So we're going to say a cost of 5,700 for job number 14. And then factory overhead, and we have the cost of the 9,009 for job number 15. So 9900 for job number 15. and then the factory overhead and the cost of the 14.4 for job number 16. So this is going to be 14.4 for job number 16. Now we have an amount here. We don't want the cash to go down. We want it to go to the accumulated depreciation. So to do that, I'm going to go to the second tab, Expenses tab, and just put in a reversing kind of transaction here. So, and that's going to be to accumulated depreciation. So this is just a journal entry. We're using this form to make a journal entry, and accumulated depreciation, and we don't need any customer or billable or any of that kind of thing. And the amount, we do need an amount. We're missing the amount, and that's going to be negative 30,000. And that should bring the check back down to zero. So the check is zero. We're recording the check and nothing's going to happen to the actual account. It should be a clearing account up here. I'm going to keep that. That's okay. So the items are going to be setting on the items. Same thing over here. And then we're just going to reverse it. So the other side is going to go to accumulated depreciation. So what's this going to do? It's going to record the cost of goods sold as it has in the past. And the other side is going to be reversed, is going to be going to the accumulated depreciation. Nothing's happening to cash. So we're going to say save and close. Check that out. We're going to go back to our trial balance. In our trial balance, we have the cost of goods sold, double clicking on it. Scrolling back down, we have our check down here and our 3 items. Double clicking on it, there's our zero check. Closing that back out, closing this back out, that's at the 674,000. If we check that on our worksheet over here, 674, that's what we want. Then we're going to go back to our report. We're going to go to the job and estimate report where we have the total. The total now at the 757,000. 757,000. If we go back to Excel, there's the 757,000 for the 3 jobs. Now again, you might say, why would I go back to? I just want to reconcile in QuickBooks. So remember, the difference is that 83,000. So if you want to reconcile this out, there's the 757. What we'd have to do every time is take, there's the 757,000, and then I'm going to go to the open jobs at the beginning of the time period, which is 12/31/19, 12/31/19, and there's the 83,000 that was open. So minus the 83,000, that gives us the 674. That should tie out to the trial balance. Going back to the trial balance, there's the 674. So you can reconcile that out every time. And as long as you do so, then again, it's really easy then to make any type of adjusting entry you need to do to be in the proper format for whatever kind of percentage of completion for completed contract or an accrual basis method.